The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. We have Stan Harley of the Harley Market Letter is going to be on at the half hour, and he is a specialist in cycles, and I happen to know this because I've known the dude for, well, I guess over 40 years now. We were just little whippersnappers back in the old days at Conti Commodity there in Westwood and Los Angeles. I posted the DAX chart first because we always try to look and see what's happening across the pond. We still have not made new highs. We made a slightly higher high than yesterday, so the market just basically had that big reaction like we've had in everything else. So, just keep an eye on that. The one I want to pay attention to today, there are two things that I really think deserve our attention. First of all, yesterday's low in the silver was exactly a 61% retracement from the December 14th low of last year to the tick. So that should mean something. We're trading about 35, 40 cents above that right now. If we go below that, then all bets are off. And believe me, we could easily do it because you had those two really wide-ranging bars down, but it did stop exactly where it was supposed to. Whether that's going to mean anything or not, we'll have to wait and see. We did rally about 65 cents an ounce off that bottom, but we'll see whether that's going to hold it. That is in conjunction with what we're seeing in the XAU that we talked about yesterday. That also came down to that 77 level. That is a very important level to look at. So bear with me here 1 second because for some reason all of the beepers are going off. This happens to be the Australian dollar. Let me see what's happening over here 1 second. I had an alert to take a look at this here, and I don't want to miss this. So let me see if it's making the level. Ooh, we're getting very, very close here in the Canadian dollar, but it's Australian dollar, but not quite yet. All right, let's get back to the silver. The silver really needs to hold above that 1640 level, folks. We're trading around 1690 right now. Whether that's going to be the case or not, we'll be able to, to determine what's going on. But there's something bigger out there, folks. This is my interpretation now. As always, remember that these are just patterns that we're looking at. So let's just take a look at what we've got going on here. First of all, we want to take a look at the utility index. If you'll give me 1 second here. I had these all lined up perfectly, and now they've disappeared. Oh, this is frustrating as heck. Hold on just a minute. Where did it go? Oh, dear. This is frustrating. I think this might be it. There we go. Here we go. We got it up to date now. Then we're going to be here. Here's what we're going to be looking at here, folks. This is important because of two things. First of all, we're looking at the Dow Jones Utilities. Look at the high that it made back in July. We already know, we looked at the butterfly patterns and everything in that because that's when the bonds were at 177. But the utilities at that time had made a perfect 1.618 expansion of the previous year's high. Now what you're looking at is the utilities making a 61% retracement of the previous year's low. So all the news is out. We've seen this bond debacle. You can see by the blue chart there, the blue line, that's the Treasury bonds. Look how they've totally collapsed. Utilities held up a little better because they related to stocks, but they have a tremendously high correlation. So this is telling me that we should be at a pretty good place for a potential bottom here in these Treasury bonds for a pretty good rally. And that's what it'll be. It'll be a pretty good rally. I don't think it's going to be a new bull market of any kind, but that's the potential that we see happening here, that we did hit this 61% retracement in utilities. And, well, we missed it by 10 cents, but that's neither here nor there. That's pretty, very, very, very close. So watch that one very closely. The bonds and the 10-year notes. They're all, very interesting. We've already looked at this long-term weekly here in the Treasury notes. We'll put this up to let you see it again. But these are some of the things that we're watching here this morning, and we'll find out whether it's going to be, too much or not as far as market action. But neither here nor there. Okay, let's take a quick look at the Treasury bonds, and you'll see here that we did get right below that level here of. Let me just put this one in so you can see it. So it's somewhere in here, and with this, the full moon that we had yesterday, and believe me, if you didn't get to see it yesterday, you've got a couple more days because it takes 4 days to go across the whole thing. So you still have another day to go out and look at it. You'll not see one this big, I believe, in 70 years. There's another super full moon similar to this one in 17 years, but one exactly like this one doesn't come through until another 70 years, as I recall. We'll have to wait and see, how that's going to unload. Someone's asked a question about the airline stocks and Warren Buffett. Folks, when Warren Buffett, what he says and what he does is a lot different than what you might think, because when you get the next issue of Berkshire Hathaway's buying and selling, they could have been selling into this. I've seen this many times over the years with Berkshire Hathaway. Those folks are very, very bright. They're extremely adept at what they do. So be really careful of trying to latch on to his coattails, because it's something that it's pretty hard to hang on to, because they're in a wind tunnel over there. They have everybody looking at them, and so they have to be tremendously careful. Now, I did want to show you something that I think you folks will find kind of interesting. We don't get to travel to India very much, but I just wanted to show you. This is from one of our students that runs a hedge fund in India, and you can see the patterns that are here. On this particular stock. This happens to be Dabur India Limited. I don't know exactly what they do, but you'll notice that the patterns are still there. The ratios are there. So it doesn't make any difference whether you're trading in Italy or Germany or India or Hong Kong or Singapore. These patterns and ratios are pretty much spot on when you're looking at what they're doing. So that's the main thing to take a look at here. So keep watching that. Now, the next one that I wanted to bring up to your attention is this gold market, because we have a situation here where we could be at a bottom. I'm not saying that we are, but I think we are. I should be, because I'm long the gold. Anyway, this is what we've seen over the last couple of days. We've had these, see these little cycle tops that we've had in here. They've both been perfectly symmetrical. What that tells me, and we just made a 61% retracement pullback here at this 1219 level this morning, and whether that holds or not. But if we get below 1212, then, all bets are off. But if we can get above 1237, 1235 to 1237 now, that's going to tell me that cycle has finally turned up, and we could get a pretty good rally in the gold market. Remember, we've come down $150 from the high, so just giving a 38% rally back would be a $40 rally, and we've already rallied 15 of that. So that's an easily possibility that if that's the case. But if you look at that gold XAU, that doesn't look like it's over to me, folks. That was just an ABCD correction. 877-927-6648.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry, powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, folks, I've been asked to talk a little bit about this Titanic syndrome that we got from Bill Ohama. This came from my good friend up in Seattle, Ed Carlson. We've had him on a guest as a couple times. I believe Stan Harley, who will be our guest, knew Bill also because he was trading out of that office, and that's where everybody traded back in the old days of the late 60s or mid-60s to the, till the 80s. But, that's neither here nor there. What this pattern means is if a market goes up, the Dow Jones goes up and makes a new high without confirmation of the new highs to new lows, that's a signal of a Titanic syndrome. Now, whether that all that means is that the market is going to correct, by 10%. If you'll go back into the July area, you'll see you had the same type of situation where the market went up into new high ground without confirmation of the new highs to the new lows, and we did get a 10% correction. So that's what this is saying that we could be looking at. We'll have to wait and see. The fact that we did not get above it, we'll be able to take a quick look at that, down the road. Now, someone's asked me to take a look at TLT. I just sent a video of that out this morning. For everybody that belongs to the 24/7 Fibonacci service. To me, that one is set up just as nice as it could be from the buy side, but whether that's going to happen, unfortunately, I'm not able to get a chart up on that very quickly. But I will say this: if you take a look at this utility chart, it's going to be very similar to what you're looking at in the TLT. But the TLT, of course, is more volatile, because that's the actual ETF for the notes, I believe, for the 20-year note. So that's what you'd want to be watching. It closed around 121, so we'll see what's going to be looking at that particular point. So we're watching. Mr. Z in the room just posted a thing from Tom DeMark, who's predicting that stocks have rallied, into the Donald Trump victory, the presidential election, and they're on verge of tumbling as much as 11%. Well, that's what we were just talking about. I guess we're the only two that's looking at that. Expectation is for UX stock to endure at least a 10% decline. And then he'll see he's looking for yields in the Treasury bonds to go substantially higher also. Oh, no, he's looking for bonds to go higher because he's looking for a high in the yield and then the yield to drop down again. So this is a possibility that we could be looking for a rally in bonds and also a move in the stock market. But whether that happens or not, remains to be seen. Now, we do have a chart here that we want to talk about. This is for our good friend Priceline Charlie. We haven't heard from Priceline, so I'm a little concerned about him. Charlie, if you're listening, call in. Everybody loves you. Anyway, we've made a 1, 2, 3, 4, 5 expanding triangle now in the Priceline chart. We got up to 115 and change, which was a 1.618 expansion. And so we are really getting ready to see Priceline probably have a pretty good move to the downside. This has been one heck of a move, folks. So that's it's due for a correction, if nothing else. So we'll wait and see if the market is going to, give us that correction or not. We'll have to remains to be seen. Someone else asked a question about, why did the emerging markets that have gotten hit so badly these last few days, why aren't they going on? Part of that is how the people anticipate what the Trump administration is going to do with trade, and nobody really knows that, folks. He basically came in on a platform of change, and I think he's going to get some change. But when you got these high school kids, skipping school to go out and promote rallies and stuff like that. Hey, I would have went out to protest against the Pope if I was in high school. I did anything to get out of school. I don't think kids are much different. I have my 16-year-old grandson got his new car this past week, and my daughter says she hadn't seen him for 4 days. Well, she's seen him, but he's really driving around, letting everybody know that he's totally free of the old mother's purse strings, I guess. But I told her, I said, don't worry, he's going to come home when he needs his laundry done, or he needs money, or he's hungry. Those three things I can promise you. Anyway, let's just look at some of these other markets that we want to be watching. Now, the Dow Jones transportations had a really nice 78% ratio coming in, but it broke that yesterday and completed the big ABCD to the downside. So kind of watch that one also. There's a lot of things that are saying that maybe even though we did make new highs in the Dow Jones, we had a major non-confirmation in the Nasdaq and the S&P and some of these others. Now, even though the IBB, or not the IBB, but the IWM made slightly higher highs. I mean, that's mainly due, I believe, to the emotionalism of what's going on in the markets. That's the way it looks to me. But whether that's going to be the case or not, remains to be seen. If you believe in the work of H.M. Gartley, he said sell these ABCD corrections in bear markets. And if you'll take a look at American Express, you're seeing it there. You're seeing it also in J.P. Morgan. However, Goldman Sachs, because it looks like they're going to have another chairman another secretary going to be running the Treasury again. He was in Goldman Sachs. He's one of the people up. So there's another situation where things seem to be the same, but they might not be. We'll have to wait and see. Anyway, we'll go from there. This is the first time that we've not had a Secretary of the Treasury from Goldman Sachs in administration. I believe the last time we had one, of course, was Paulson. And they're talking possibly of Jamie Dimon, but frankly, I think he's going to pull somebody out of the private sector to do it. Maybe somebody, Carl Icahn won't do it, but it would be nice to see somebody like Wilbur Ross or somebody else come in like that, but we'll wait and see. No matter what happens with this election thing, folks, I think we're going to be okay. We'll see. That's it. We do have a key Bradley date is coming in tomorrow, but the key date, folks, is going to be November the 18th. I was chatting with by email with Norm Winsky. I'm going to try to get him on the show, and believe me, the 18th is going to be a pretty big day, And, it's just going to be, that's Friday, so we got to watch it very closely. I don't know how many big reports we got coming out. So between the 18th and 21st, between Friday and Monday, I would expect something, really big to happen. Now, it wouldn't be unusual for the market to make a big run up and then, catch everybody by surprise with this emotionalism. And believe me, there was a lot of emotionalism. When you get the Dow Jones to move 1,400 points in a little under 20 hours, that's one heck of a move. That's an outlier event. We haven't seen a move like that in well over 5 years. So just keep your powder dry and see what's going on with some of these things. Now, the U.S. dollar index is also under a big big move here. It's we got up to that 100 level in the dollar index. So it's also broken out to the upside. That usually has bearish connotations for the gold, and certainly gold is not, rallied very much at all. But whether it continues on or not, remains to be seen. But we need to watch it very, very closely. All we need for this stock market to get really bullish is to see another 100-point up move in the Dow, or 15 points or so, 15 to 20 points in the S&P, but we're not seeing it in the other markets, so it looks a little suspicious. Stay tuned for Stan Harley.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's nadex.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and we're talking, hopefully, with our good friend Stan Harley. Stan, are you there?
I am indeed. Good morning, Larry.
Good morning to you, my friend. Stan, I have a question for you. You got to rack your old brain here. Well, yours is as old as mine. Anyway, do you remember did you know Bill Ohama?
Yeah.
You remember
Yes, I did.
Yeah, he was a pretty sharp guy, and he has this thing called the Titanic syndrome that people have been chatting about. I just wondered if you remembered him or not, but I certainly did because he traded out of that Conti office there in Westwood. So why don't we go ahead and talk about your cycles, because I think you're one of the best in the business. So why don't you tell us what you've got here, and maybe we'll have some questions coming in.
Absolutely. I look at a number of things, Larry. In particular, I look at market cycles, and I'm an engineer by training, so I want to look at take a peek under the hood and try to understand the math behind all this stuff, and that's in effect what I do. We saw a low, as everyone knows here, right around Election Day. The cash indices bottomed on November 4th, and the futures bottomed on November the 8th. And I was just anticipating a low right in that time period. As you know, I had a number of cycles that all clustered within that narrow window of time. Now, just as a backdrop, I find that we get what I call a primary cycle. We tend to get sharp bottoms in the market at roughly 33-week intervals. It's 4 cycles of 40 trading days each. It averages about 159 trading days, 33 weeks, or about just under 8 months. And the last bottom in that cycle was the February bottom of earlier this year, February 11th, and the subsequent occurrence in that cycle was on November the 4th. So no surprise that we bottomed there from my perspective, and we're going higher. The Dow is already at new highs. I expect the S&P and the NASDAQ to be there in new high territory in the not-too-distant future, probably later this week, certainly by early next week. And we'll see how this thing progresses. When I look at the market for me is made up of 5 components. Those 5 are the Dow Jones Industrials, the Dow Jones Transports, the S&P 500, the NASDAQ Composite, and the New York Composite. And I want to see all 5 of those components confirming the move then underway. Right now we've got the Dow already in new high territory. None of the other 4 has gotten there yet, but I think they will in the not-too-distant future. The New York Composite and the Dow Transports are a little bit behind. They may not get into new high territory until late December, but I think they, in fact, will be there. We're in a bull market. I think we've got another 6 years or so of bull market to go before this thing ultimately tops out. But between now and then, lots more bull to go, Larry.
Okay, we have a question for one of our listeners. What do you mean by clustering?
Oh, good question. What I do as a cycles analyst is I don't depend on just one cycle. I look for a panoply of cycles, clustering within a narrow window of time. So when I say cluster, I had, for example, at the election day lows, I had a 93-day cycle clustering right in there. I had a 114-day cycle. I had a 61-day cycle. And when I see all of these cycles clustering, that is to say, they're all nesting or coming due within about a 3 or 4 day window of time, to me, that bolsters confidence in my theory about a cycle low or a cycle high occurring.
Okay, that makes good sense. Another question: did you study the work of Jim Hurst when you first got studied into cycles, much like I did back in 1970?
Jim Hurst, a name for the past. Absolutely. He wrote
Profit
a book back
Magic
in
is
Stock Transaction Timing. Yes.
Yep.
1968. Yeah. That was the Bible. Oh, heck yes. Great book. That man did some pioneering work. By today's standards, primitive, but in its day, phenomenal. Just phenomenal. He had access to computer power back then that no one else did, of course. And he did some very, very good work. His analysis was part computerized, part graphic, And he, too, looked for a nesting of cycles within a narrow window of time and drew envelope bands and did it with pencil and paper, which, still works. A brilliant man. And, yes, I have his book right here on my bookshelf.
Yeah, I was fortunate enough to be his stockbroker when I was at Drexel Burnham because I met him in April of 1970 in San Francisco when they had the first cyclotech thing, and then later on I became friends with him. He was living up in Grass Valley, California, up by near the Nevada border. He was a big fisherman. He fished every day. He didn't like trading very much. I think he put 3 trades on with me over the years, and but he just didn't care for trading too much. But he certainly did the research, that's for sure. It's really quite amazing. Okay, I posted your second chart in here that you were looking at here. This is the one that shows the transportations, the Russell and the Dow Jones. The Russell has made new highs then, correct?
Yes, it just did yesterday.
Okay, so we have, 2 of the 5 now have... Oh, you don't use the Russell as... Yeah, the Russell, you don't use that as...
The Russell is important, but I give it kind of a lesser importance. I focus on primarily what I call the Big 5, and I suppose I could stretch that to the Big 6. And if I did, I would include the Russell. But the Big 5 are of primary importance. The Dow Industrials, the Dow Transports, the S&P, the New York Comp, and the NASDAQ Comp. Those, for me, make up what I call the Big 5.
Okay, good. All right, we had one other question from someone, and that is, historically, do you keep an account of when the cycles work and when they don't work, and what is the percentage?
I keep a very, very detailed analysis of all the cycles that I track. And what I do is I dump the data into a spreadsheet and do a statistical analysis of the data. So, for example, I had a 93-day cycle due right around the November 4th time period. And I compute the standard deviation on that based on all the prior occurrences. And the standard deviation on that was was under 3 trading days. So I knew from a historical perspective to look for a low in the vicinity of November 4th, plus or minus about 3 trading days. And, of course, we got it, and the low came on November 4th. Cycles are they're not always a precise clock. That is to say, they may recur at 1.0 intervals, or they may expand or contract by Fibonacci relationships, and that's a tricky thing to handle in real time. And so the way I handle that is I look for, as I said earlier, clusterings. Now, back to the gentleman's question, do I keep track and do I keep percentage of when they occur and when they don't occur? No, I don't do that per se. If, for example, I'm expecting a cycle within a short period of time and it doesn't occur, then I look to see if maybe it might be expanding by some kind of a Fibonacci ratio.
Okay, stay with us. We have to pay a few bills, and we'll be right back with Stan Harley and the Harley Market Letter.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
It's 2016, and TFNN has a brand new programming lineup to kick things off. Starting January 4th, swim lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the three hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin, as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Okay, we're back, folks, and we're talking with Stan Harley of the Harley Market Letter. Stan, I posted this chart of the 39.8-day trading cycle, and boy, did that bring back a lot of memories, because I can remember Jim Hurst focused on that 20 and 40-day nominal cycle for many years. It worked for like 3 years, like clockwork. And then, of course, it started to shift. But why don't you talk to us a little bit about this particular cycle that you're looking at here, because this is a good trading cycle.
This, from a short-term perspective, Larry, this is the dominant trading cycle. And your point that it didn't work, I found interesting. Actually, it does work. It works all the time. The challenge for those of us who are cycles analysts is to understand that cycles expand and contract. That is to say, a 40 trading day cycle is not always 40 trading days, as one can see on the chart. Sometimes it's 37 trading days. Sometimes it expands to 68. Sometimes it contracts to 26. Cycles expand and contract by Fibonacci constants. And as a general statement, they can expand by a factor of 1.618, or they can contract to 0.382. So, for example, a 40 trading day cycle, if it expands to 1.618, by 1.618, that would take it out to about 64, 65 trading days. If it contracts to as short as 0.382 times 40, that would take it down to about 15, 16 trading days. And that is, in fact, what happens. Cycles are an accordion. When one says that we're tracking a 40-day cycle, that's the average over the long haul. And I use that word in italics. What's the long haul? Well, there's no precise definition of that, but one needs to look at it, I'd say, at least 10 iterations of this cycle or any cycle, and you'll find that despite the expansions and contractions, that the average in this case falls right at 40 trading days. It's exactly 40. To be more precise, it's 39.8. There's some mathematics behind it, but one could call it 40 for round numbers, and it's my bread and butter. It's what I call a trading cycle in the stock market. Now, earlier in the program, you and I talked about the primary cycle. Each primary cycle, Larry, is made up of, generally speaking, of 4 trading cycles. So 4 times 40 is 160 trading days. So each primary cycle averages 160 trading days, sometimes a little more, sometimes a little less. If we go back to the low in 2002, October 10th, 2002, from that low to the low that just occurred here on November the 4th, there were exactly 22 primary cycles, and if we take that time span in trading days, divide by 22, it falls on 159.2 exactly. And if you take 39.8 multiplied by 4, it's 159.2. So we have a very powerful tool at our disposal in cyclical analysis, but one needs to understand that cycles have this quirky thing called expansion and contraction, and that's something we have to deal with.
Well, it's never easy, as they say in the trade, but you've certainly done a fabulous job. It brings back so many memories when you just start, going over these cycle numbers and expanding and contracting, because I used to get the old Cyclotech charts by special delivery, every Saturday morning. I don't know if you got those, way back in the late 60s, it was early 70s by then. And I lived and died by those. And my kids used to color in the charts and stuff when I was done with them. But that's neither here nor there. Now, the other question that someone asked is, have you ever used any, because, we do some astrology here at TFNN with some of the guests we have on. Have you ever added any astrology to this at all?
Larry, I have looked at that a lot, and I have not, from my perspective, found sufficient consistency in the data. That doesn't mean it's not a viable tool, but I kind of set it aside, and I focus more on cycles and market internals. Market internals meaning advances and declines, new highs and new lows, things of that nature. And I have a full plate with that.
Oh, I'm sure you do. And I can understand that because, I did the cycle work and then I didn't do anything with astrology until, 10 years later, back in 1986 when I first started looking at it. So there's nothing, believe me, it's, far from foolproof like everything else is. But the question that I have for you is you do a lot of work on the advanced decline lines and the new highs to new lows and stuff. And I'd like to talk to you just a little bit about that because you have a very interesting chart here in your letter showing the advanced decline line and the new highs to new lows. You want to explain to us what you're seeing right now?
Oh, absolutely. And just to digress for just a minute on the astrology aspect of things, I know that's your bread and butter, and I have the books that you've written on the subject on my bookshelf. There are a lot of different planetary aberrations that frequently coincide with market turns, and I've got a database 10 feet high on it that I've compiled over many, many years, and I know you have too. The one aberration that I find has the highest correlation with market reversals is Sun and Jupiter, either in opposition or in conjunction. That has a very high correlation of primary cyclical turns, either highs or lows. Some of the other aberrations have much less consistency, I found. Maybe you have data that suggests something otherwise, but that's been my research.
I can understand that.
The market internals. One of the really, really cool things about the stock market that no other index has is the availability of what I call market internals. That is to say, we have some components that describe market action, but they're not price-based. Advances and declines, unchanged issues, new highs, new lows. There's a lot of data for the analysts there to compile and use to help in the assessment of whether the market is going up or down. And I do work with the advanced decline line. Probably our listeners most of them are probably well acquainted with the advanced decline line. Simply put, it's a running daily summation of each day's net difference between advances and declines. And one compiles that summation day by day by day and looks at the trend on a graph. And as a general rule, that tends to go up or down with the price indices and the index on which the data is based is the New York Composite. And we want to see confirmation with the advanced decline line of the New York Composite. And most recently, the AD line with the new highs. And as a general statement, the AD line tends to top out or bottom out ahead of the New York Composite. That's not 100%, but it's probably on the order of 90 to 95%. So we got a very, very good leading indicator there. And as I said just a few weeks ago, the AD line went to a new high, which would suggest the New York Composite, as well as the Dow, the S&P, the NAS, should not be too far behind.
Mm-hmm. Did we make a new high in the advanced decline line in this run here? Because
not yet.
I didn't think so.
Not
I
yet.
was.
No.
Hey, listen, stay with us here. We've got to pay a few bills, and I want to have give you a little commercial, okay?
Oh, thank you.
You bet.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
The Harley Market Letter, Stan. Take a few minutes here and tell the folks how they can reach you and some of the services that you provide. By the way, Stan, I really enjoyed this half hour with you. This was like old home week for me. I really enjoyed it. So I hope to have you on again soon. This was really good.
Well, terrific, Larry. My pleasure.
Okay, why don't you tell us a little bit about where you are and how they can reach you?
Oh, Larry, I'm in Southern California, just north of Los Angeles, in a town called Thousand Oaks, and I publish a newsletter called the Harley Market Letter. And if listeners are interested in finding out more about it, they can go on to my website, www.harleymarketletter.com, HARLEY marketletter.com.
Oh, that's great. Now, what do you charge for it per quarter or year? What are your fees?
The newsletter comes out once a month. It's $295 for an annual subscription. And then I also have a biweekly update service, which supplements the monthly letter. That comes out twice a week, and that's $1,050 for the full year.
Okay. And let me ask you one other question. Do you have a Twitter service or anything like that? Someone was asking whether you had a social media service also.
I don't. I do have a Twitter account, but generally I do everything via the newsletter and email.
Yeah, I've never done any social media at all. Probably too much to my, I would get in trouble probably. So I don't. I don't trust those things. Stan, can you believe where we've come in these last 40 years? From we used to have that Bunko Ramo board at the Conti Commodities. We couldn't even get intraday prices. Do you remember we had to wait? I think it was 1980 when that ADP came out with that big machine that gave us 5-minute prices, and it cost $4 to get an intraday chart on pork bellies. I mean, it's just totally amazing what's happened here.
Absolutely, and the listeners may not know, but Larry used to reside in Southern California.
Yeah. Hey, listen, my friend, thank you. We're going to have you on soon, okay?
Thank you, Larry. My pleasure.
Thanks for being on.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.